Hello traders, Gary Wagner here, just about 11:45 in Honolulu, 5:45 in New York. It is Wednesday, October 16th, 2019, and this is the Daily Report for Gold and Silver. We had strong to fractional gains across the board in the precious metals, and it seems as though the devil is in the detail. And I'm speaking about the accord that was reached on Friday of last week between the United States and China. As we get further and further away and start to uncover some of the content as well as context that was resolved during that two-day negotiation, we're seeing that the two countries are still a little bit far apart from actually putting pen to paper, so to speak, and signing that accord in Chile next month. The Chinese have come out and stated that they want one more meeting before anything is signed. And today, the House passed a bill talking about the protesters in Hong Kong, which wasn't a favorable reaction by the Chinese. We wouldn't expect that. So we've seen nice growth, a return to safe haven assets. And as you'll see when we look at our technical studies, I'm seeing a stronger case made for a real bottom forming in gold, a base, and I am looking for higher pricing from here. Let's take a look at the pricing today as well as our technical studies. A solid performance today in gold, gaining a little bit over $10, $10.50 to be exact, with December futures closing at $1,494 per ounce. That's a net gain of about 0.7%. But the big mover once again was palladium, $1,734.30, a $37 gain, a new all-time record high close, and that continues to be the precious metal that has been performing in terms of a percentage gain with the greatest results. Silver and platinum had gains, but they were fractional. Platinum gained about 0.1%, $1.20 at $890.40, and silver gained almost 0.2%, or 3 cents at 17.41 cents. Let's take a look at our charts. We are looking at a daily chart. This, of course, a continuous contract representing December futures. And the first thing that I do want to take a look at is the recent lows that we have seen in the market over the last week or so, ever since we dropped well below $1,500 per ounce. That's these series of tops right up here, and then broke into the high 14s. And what I find most interesting about recent activity in terms of where gold is traded and specifically the lows, if we take a look at the area of $1,480 per ounce, and then we take a look and see where the market is traded in terms of a low over the last 4 trading days, that's these 4 candles here, we can see that we've had alternating candle color, which means we're forming a base. We're not going straight up, we're not going straight down, but we have also seen some very, very solid support at that level. Second thing that I'm noticing about the market is if we look at these series of highs that have come in, and let's get a pointer for this, but a series of highs that have come in, we can definitely say that we have our highs moving lower and our lows moving higher. Of course, that is a compression triangle. We're still, I believe, a little bit away from the apex of that triangle, but nonetheless, my expectation would be that as the market consolidates and builds a base and gets closer to that apex, once it breaks, it will break above, because typically the market will move after a period of consolidation in the prevalent trend direction, which has been absolutely up in gold. I think we'll see a solid break to the upside, but I think we're going to need to see a couple more days until we get a solid performance in terms of reaching the apex itself. But the fact of the matter is, we're holding 480. We need to break, of course, above 1500, and we are still a ways away from going anywhere near the 50-day moving average, which is currently at around 1515. However, I do believe that as more and more details come out about the accord reached on Friday between the Chinese and the United States, I think that the spin they initially put on the results was so positive that it took the market by surprise. That's when we saw gold and the other safe haven assets really melt down. We had risk on come back into favor, and we're seeing that kind of reverse again over the last couple of days. My recommendation is to remain flat with no active trades. I am looking to go long gold, but I just want to see a little bit more technical evidence, not so much that the lows will hold because we've seen that, but that we have the ability to move to higher ground. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.